The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Welcome, folks, to the Money Masters Show. I'm your host, Steve Rhodes. Thanks so much for joining me as we come and start this segment of the show. The Dow is off about 39 points. S&P is down 2. Composite up $3 right now. Russell 2000 off 3. Apple is leading the charge to the upside. We'll go take a look at the indexes out here. You've got Apple up $15 and change. Goldman Sachs up $3. Borg Warner up $3 as well. Chipotle leading the charge to the downside off $18.32 right now. Precision Cast Parts off $5. Salesforce Innovation, Salesforce.com down $5. Google off 4. Carpenter Technologies off 3. Our calling number is always 877-927-6648. It'll be an interesting market today for sure, because across the pond here right now you've got the DAX just turned slightly green. That is up 6 points. The FTSE down 9 at the moment. Over in Asia they had a very red night. The Nikkei off 278 points. The Shanghai off 16. The Hang Seng off 24. We've got King Dollar up 4 ticks right now. We'll take a look at the currency market. The gold contract trading out at $16.77. That's off $6. Silver down 19 pennies right now, down 0.6%. Trading out at 31.31. Let's go start with the New York Stock Exchange here. You can see right now having a inside day, no bearish candle here yet. We do know the New York Stock Exchange is in the overbought territory. So in order to, and it got up there really back in that January 4th time frame, approached it on January 2nd. It's just been traveling sideways to slightly higher out here. I think it's the New York Stock Exchange that you want to pay attention to. That's where you'll see your next signals coming from, bullish or bearish out here. So far today, it did gap down from yesterday's close, but really just an inside day as we take a look at the candle of today, and it's really just about where it opened this morning, trading out at the at 2731. I'm sorry, the 8,700 mark. It's down 32 points off of last night's close, but trading right where it opened up at. Let's go take a look at the other indexes out here. The NDX 100 being the key one. The NDX 100, why? Because of, Apple's weighting structure inside there. Yesterday in the NDX coming back down and testing the lows. Those testing the low of the gap up from January 2nd. That is the 2716 mark. Can't bust it down. That area is a very strong area of support. So it's very clear, and that's where using gaps is using gaps as your friend out there, and that's what I certainly want to be able to teach you how to do. You don't want do gaps eventually get filled? Yes, but until that time period, the gaps are one of your best friends out there, one of your best friends for trading, because they give you so much information. They clearly tell you where the bulls and the bears are. They clearly tell you, where you can take a look at drafting if you're an intraday. It doesn't matter what time frame of a trader you are. Just make sure that you understand gaps, how to use them, how to take a look at volume, when those windows close. If you don't understand Japanese candlestick charting, then let me teach you how to do that. I've got a great workshop. If you click on my name on the homepage at tfnn.com, it'll take you to the page where you can see my newsletter service. But also underneath that, you'll see 2 workshops. These are workshops. There's one on candlestick charting, one on buying and selling the D point. Both of those are tools that you want to make sure that you have inside your arsenal for trading out there. And it doesn't matter what level of trade. It doesn't matter whether you trade options, whether you trade currencies, whether you trade futures, whether you trade ETFs, equities, whatever it is. You want to make sure you understand what the market is telling us. In this case here, with regard to the Nasdaq 100, couldn't bust it down, says it should go up and test the high. Well, the high that it would test, the NDX, could be the January 2nd high. That would be the 2746. Also makes sense that it would just go tag the January 11th area before it gives you next piece of information. The low of that is 2738. You are at right now in the index at 2732. So that's where it's headed. It's been up to a high so far, 2732.75. That is where the NDX is at least headed to. You can also see see that that area has been a resistance area, so it's been traveling in a sideways consolidation. Now, the interesting thing, the longer that this consolidation takes place here, when you travel in a sideways consolidation, what happens, folks, is that when you bust out of it, the probability is you're going to bust out to the side that you came from. Well, we know having that strong session off of December 31st, the gap up on January 2nd, we know that this consolidation is coming from the downside out there. So that's on your NDX 100. That says, obviously, and it's more than just about Apple. It is, Apple's just one of the 3,000 stocks, in essence, that are traded on a daily basis out here. So that's your NDX 100. Let's go take a look at the other indexes out here where you'd get some signals from. The Dow would be one. If we take a look at the Dow traveling right now at 13,494, off 39 points. The Dow out here, so far the session, or opened up at 13,534. The close last night, 13,534. So the Dow potentially could be forming a bearish engulfing candle. In order to do that, it would have to close at or below 13,507 to 13,494. You have the last time we saw any kind of bears show up inside the Dow was on January 7th and January 8th out there, forming a bearish engulfing candle. You do have the Dow traveling into the resistance zone. That is the September 14th area. I think that the Dow does well. Let's see. It did not tag the October 5th low. That low is 13,568. Yesterday getting up to a high of 13,546. So not much higher to go in order to tag that swing point. It has rejected September 14th at this stage. But I think the Dow actually wants to get up there and just go join the party and do a little tag before it gives us the next piece of information on the daily chart. It's got more room to go before it gets into the overbought territory, so no reason for it not to also make a run for those highs. Let's go take a look at, so we did the NDX, we did the Dow, we did the New York Stock Exchange. Let's take a look at the Russell 2000 and S&P. As we do this, we take a look at the Russell 2000 first, really just having an inside day here. No sign yet of weakness. Yesterday, very strong session in the Russell really being a leader out there. And we know that the Russell 2000 is, up and over its highs. Of course, the Russell 2000 is struggling. If you take a look at the IWM on the weekly chart, it has not been a breakout confirmed with volume out there, but it is still trading above its highs. So the Russell not providing us with any information here just yet. Certainly no bearish information, that is for sure. Let's go take a look at the S&P 500. The S&P 500 right now trading out at 1470, still hanging out at its highs out here. So it's losing energy. These bodies here, it's consolidating sideways, but these small little bodies, number one, they still tell you, these small bodies, and I'm going to go ahead and explode this up here on the screen for you. And the small bodies we're talking about are January 11th. That is a doji candle out here. The candle on January 14th, that's a hanging man candle here. This here, just on yesterday's candle, just really a small-bodied candle out there, not any name. The hanging man is a reversal candle, by the way. Doji up towards resistance. That can be a reversal candle as well. Today, you've got a little bit of a bearish engulfing right now, but a lot of time left in the trading session out here. But these small bodies, number one, what they can tell you is take a look at the wicks. The body is really the essence of price out here. But if you take a look at the wicks of these candles, who's in charge here, bulls or bears on these trading sessions? January 11th, January 14th, January 15th out there. If you're just trying to read the message of the markets out here, yes, it's tired up with these small bodies, but you can see that the bulls are the ones that are truly still in control of this marketplace. They've been able to push up. That's what those long wicks are telling you, and we'll see how today's trading session, the bulls and bears, they can't hide. What you want to do is you want to be able to read the message of the markets, and that's really that's what's so powerful about Japanese candlestick charting. So that's on your S&P. S&P is trading into the September 14th. The swing point just hasn't hit the high. That high is 1474.51. I think that is where we really get the next release of information as the S&P tags that area, gets over it. If it stays over it, it can certainly drift higher out there. But we take things one day at a time. So I think we covered all indexes. We didn't take a look at the transports. Transports also very strong. The transports up and over the swing point here from July 8th, 2011. This is the weekly chart that we're taking a look at. So up and over that area, up and over the 2008 highs out here. So the transport's up in new territory on its stock chart here. Let's go take a look at the SOX Semiconductor Index. I think I've got that chart up here as we take a look at all of the index charts out here. The SOX also, looks like yesterday, they also have a gap up from January 10th now. And the SOX Semiconductor industry here, not showing you any bears here showing up at their party. The SOX is trying to get back up into the September 14th level as well. Now, it's already been up there. Got up there on the 11th of January. Tagged that area again on January 14th. Other than, in the trading session yesterday, wasn't a gap down, but intraday, in essence, or just traded inside the candle. But as we pull this back here, you can see even the bulls, even as the bears tried to push this equity down here, don't know whether it was the end of the trading session or when it took place, but inside the stocks, you can see that longer lower shadow out here. Still the bulls in control of the semiconductor index. So I expect we will see the SOX also, and probably today, get back into the September 14th swing point. That low, 402.58. It's trading at 401.65 right now. Let's go take a look at the ETFs. Put this together for you with the taking a look at the ETFs. We'll start off with the Qs. Because the Q is where we're going to get some information. You can see yesterday pushing down into the gap up into that open window, doing that on 50%, lighter than 50% volume into that trading session. That gap up that occurred on January 2nd, a little over 70 million shares. Yesterday's pullback on 31 million shares. I don't think so. And this is a really well-tested window, really well-tested gap. And that's important both from a bullish standpoint and a bearish standpoint, because when you get a close below the 66.48, that is going to tell you that finally the bears, no, I don't say finally, that the bears are stepping into the equity here. And just depending on how you trade, if you're long, to be careful. And if you're short, that's what you would be looking for. I'm flat. So I don't have a horse in this game here just yet. I'm waiting for additional signals in the marketplace. Now, we do know that the Qs struggling here at the October 19th downdraft. That's got 75 million shares to the downside. The high is 67.27. I suspect we will see the Qs go tag that area. Don't know whether it'll do it today, but it will tag that area. It's at 66.85 right now. Let's go take a look at the SPYs out here. SPYs, volume-wise, yesterday doing 93 million shares. 93 million shares coming into 169, though. That is the September 14th area. SPYs are going to need much, much more energy as that September 14th high gets tested. The high there is 148.11. Volume-wise today, 25 million shares in just under an hour of trading, about 50 minutes of trading. So if I do my math right out here, that's about another 130 million. That's 100. Well, of course, we do know in the first hour of trading, you've got more volume weighted towards the first hour and the last hour, but not bad volume during that first hour of trading. 25 million shares. Dow's off 35. S&P's down 2. Composites up $1.74. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and will be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 30 points right now. Composite up 5. Apple up $17 and change. No, Apple's not a buying opportunity at all. Let's take a look at the Nasdaq futures, though. Let's look at the 30-minute chart here. If you're watching on Tiger TV, you can see what it is that we're looking at, the patterns out here, the A to B equals CD, the retracement patterns. If you're listening in on the radio or your mobile device, you can always catch an archive of this show on Channel 10. So as you take a look at the Nasdaq futures right now, trade out at 27.2950, up over the 1-to-1 A to B equals CD. That completed at 27.29. We'll call it. It's at 27.29 and a quarter. Of course, we're just looking at a 30-minute chart out here. 27.2875 actually is the 1-to-1 A to B equals CD. Your 8-point on this would be the low that came in at 10 o'clock in the morning on January the 15th. You can see as that low was being formed, it was moving into the oversold condition, had this nice little bullish engulfing candle come in at 11 o'clock in the morning on the 15th as well. Your 8-point price is 27.0525. Makes a move up into the 5:30 time frame. Let's see, 5:30 in the evening time frame on January 15th. That was yesterday, obviously. 27.1775 makes a retracement. What kind of retracement? Yes, you've got it. 0.618 retracement. We'll go ahead and take a look at that move. So if we come off of our low, our A point, all the way up to our B point, what you will see is the 0.618 area would be 27.11.50. Actually moved down to 27.10. Close enough for our kind of work that we do here. As it was moving down, as it was making that retracement, gave you a nice bullish engulfing candle at 5:30 this morning here. That set up your B point. You can see also from a price standpoint, price was pulling back, was moving down into the sold territory. Didn't get all the way down there, but you got the bullish engulfing. That set up your B leg. Now what you've got, and you had follow through off of that bullish engulfing candle as well. Now what we can see is you can see price here now starting to move into the overbought territory. If you're taking a look at the stock chart with us on the screen, you're taking a look at that relative strength / relative weakness index, if you will. Indicator that we use. You can see right now you've got pretty wide-ranging bars. It comes into this 0.618 level. You've got 4 minutes left in this 30-minute session. But if you come into the 1 to 1.272 as it is, as you're coming into the 0.618 level with a wide-ranging bar, what does that tell you? Does that tell you it's going to reverse right there, even though you're coming into overbought condition? No. You don't want to come into with a wide-ranging bar, and all you have to do is actually to understand where the bulls and the bears are, depending on how it is that you trade. And, I'll show you this on a 30-minute chart because we can just simply follow it actively here during the next 33 minutes. Works the same way on shorter-term charts as well. But right now you've got the completion of 1 to 1.272A to B equals CD coming into the 0.618 level. And from a trading standpoint, and it's moving into overbought territory. Why is that important? Well, just come back to the left-hand side of the chart. Take a look at the patterns out here. You can see the last time that the Nasdaq futures 30-minute chart was in the overbought territory was back in the January 13th time frame. Once you get up there, what happens with price? What happens with when you get into it overbought or oversold? You've got to work itself off. And it does that either by moving sideways or by retracing out there. It works that way on both ends of the spectrum. You just have to pay attention to the candles that are out there. They'll give you the signal whether something is going to reverse, or it just helps you with regard to your money management and being able to tighten stops and things of those sorts. So that is on the Nasdaq futures. You've got a 0.618 Gartley sell pattern here that just formed as we're coming into this 10:30 session out here. Of course, you don't have any bears showing up saying that this is going to be the area where it will reverse. This area does not hold. You will see the Nasdaq futures get up into the 27.41 level. That is the 0.786 retracement, and also would be 27.43 would be a 1 to 2 A to B equals CD, 1 to 1.618 at about the 27.39 level. So I hope that helps you out. Let's go take a look at some of these stocks here, popping and dropping. Let's go take a look at Goldman Sachs. See what Goldman Sachs is trading into. That is up a nice about 3%, 2.7% this morning. GS is the ticker symbol. Let's refresh this chart here, and let's see what kind of volume we are dealing with. So give me a minute for this to populate. Okay, so let's pull this stock chart back here. Goldman Sachs trading out at 139.29, gapping up this morning here. Yesterday's high, 137.26. The low here, 137.90. So you've got nice volume in this equity. Of course, we can see on the daily chart here, it is also in overbought territory. Volume so far today, 3.7 million shares, taking out the most recent swing point high that has 6 million shares. That is from January 10th out there. 877-927-6648. Borg Warner having a nice morning. Cabela's, C-A-B, is the ticker symbol, up 5%. Hyperion Therapeutics, we'll take a look at that. HPTX up 15%. We'll be right back.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the Nasdaq 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Let's go take a look at bonds as we come back from this break. Taking a look at the 30-year Treasury. We were taking a look in the earlier segments at the gap up on January 2nd as we were taking a look at the NDX, how that was testing the low of that gap. That was acting as a strong support area. We have going on right now in the Treasury, the 30-year Treasuries, we have a gap down, an open window that is being tested. That is also January 2nd. The top of that gap is the 146.100 level. Yesterday, you did have the 30-year Treasury get just slightly above it, 146.14, close back below it. That was the first test of that gap. This morning here is the second test. It's trading at 146.7. And so, the close will tell you whether or not this area is starting as if it's potentially forming a strong area of resistance out here. Now, if you're bullish, that's what you certainly want to see. Just simply from a directional standpoint, bonds move up, markets typically move down, and vice versa out here. So you'll be paying attention, or you want to pay attention to this gap as well out here. So far, excuse me, holding as a strong resistance level. Needs more than just the test of yesterday and the test of today that is going on. If we take a look at natural gas out here, natural gas getting back inside the rising price channel out there. So the breakout on natural gas to the downside on January 3rd as well as January 9th out there looks to be a false break to the bottom out here. So natural gas back inside its rising price channel. Light sweet crude. We take a look at light sweet crude yesterday, forming a bearish engulfing candle. That bearish engulfing candle is being tackled here today. So the bears look like may have been a one-hit wonder when it comes to light sweet crude. This area you can see that really we were taking a look at this yesterday. We took a look at this during the, I think it was during the first segment here. You can still see that in these candles, even though you've got smaller bodies here, for the most part, you've got bulls really in control of the sessions with regard, with the exception of yesterday, but that is being defeated here today on January 16th. If this area here gives way, the 94-ish range, we will see light sweet crude get up into the 96 level. That is the 0.786 retracement. You can see that light sweet crude here have got into the overbought condition. That's why we're seeing this just kind of gradually work its way sideways to higher. It looks like light sweet crude actually wants higher price. Silver, on the other hand here, did break out finally of the body from December the 20th out here. Silver starting to look a little bit more bullish here. Now, it is running into resistance for whatever reason happens to be the 50-day exponential moving average. That level here is $31.58. It's trading at $31.32 right now. But looks like silver wants to make a 0.618 retracement and go up to the $32.46 level after breaking out of that little sideways consolidation yesterday. We take a look at gold, see what Goldilocks is doing here this morning. Gold also, gold had that nice hammer candle on January 4th. That told you that now it's got high volume at the lows, so we will see that area being tested here. Gold is actually not as strong as silver at the moment, but it certainly is also gradually moving up towards the 0.618 level, which is 1705 out there. What else do we have around the world? Let's go take a look at the UK. Let's look at the FTSE, see what the FTSE is doing here. The FTSE, which has been very strong. You can see the bulls stepping in to the FTSE. About an hour, less than an hour left in trading right now today. If this candle formed like this would be a hanging man candle. It is really a bearish reversal sign, but I don't treat it as such because when I take a look at that candle, to me, the bulls are in control of this trading session. So I say the Japanese had it wrong when they came up with that hanging man candle out there. At least you don't really use it as a reversal candle, in my opinion. So you can see here, even though we had the bears were out there early morning doing their work, it's the bulls that have shown back up, pushing prices higher in the FTSE. The FTSE making a 1.618 expansion off of its set of swing points from September 14th down to that was the high, down to the low on November 19th. Let's go take a look at the DAX, see what they're doing over in Germany here this morning. The DAX is trading at about, let me see, it's easier for me to read here. The DAX is trading up 12 points here this morning. The DAX has actually looked more bearish, but what the DAX has done is really testing the gap, and that's going to be the gap from, looks like December 30th, because at December 31st on New Year's Eve, the DAX must have been closed. So if we take a look at that open window, in this case here, testing the bottom portion of that window, you can see that now also is a strong area of support that was tested only, but today would be the second test, but it was tested yesterday, rejected. And when I say tested, I'm talking about the high of December 28th. That high is 76.6568. Yesterday got down below it, closed out above it, closed yesterday at 76.75. That window is still a strong area of support out here today, also testing it, and you can see the bulls coming in towards during the last hour of trading here. The DAX closing in about 50 minutes out here. So the DAX, which has been the most bearish, was really doing nothing more than coming down and testing that open window out there. So it's bullish looking when you take a look at that area holding. That's in the markets around the world. Let's take a look at the King. What is King Dollar doing? King Dollar right now is up 8 ticks, trading out at 79.84. You want to see a thing of beauty, folks. This is a thing of beauty with regard to expansions and contractions using the Fibonacci sequence numbers out here. You can see the 0.786 level. That's the retracement that we saw coming into this hammer candle from December 19th out here. Very powerful candle formation on December 19th. You also had in the relative weakness getting down towards a oversold condition. Then, boom, you come into it with a hammer candle. And what has happened is the U.S. dollar index has pulled back to the 0.786 retracement level, getting and testing, looks like testing the top of the hammer. The top of the hammer, 79.40, 2 trading sessions ago, getting to 79.40 exactly on January 14th. Looks like the king wants to start moving up. What you can see, you've got 0.786 retracements, how well they work. 1.72 expansions work. This is a thing of beauty when you take a look at your 618, 786, 1.272, 1.618 expansions out there. What is that all about, King Dollar? Well, it's all about the currency market. You can see here the euro giving a bearish engulfing candle yesterday's session here as it moved off of its highs. Those highs were out there testing the area, this little cluster of candles in March of 2012. So making another 100% move running into an area where it should find some type of resistance, and it did. Gave you a bearish engulfing. We'll see if there's some additional follow through today. Of course, doing all that work while it also got into the oversold territory of that relative strength indicator. You want to certainly make sure that you are using this in your trading. Why? Because you're going to want to sell when it's up towards the highs, and you're going to want to buy when it is at the lows. And you can use it on whichever time frame it is that you trade, and quite frankly, on any vehicle that you trade as well. And you put that together with candlestick charting, then you've got it all in place. Let's go to Jason in Spokane, Washington. Jason, thanks for calling. Thanks for holding. How are you today?
Awesome. Thank you for taking my call.
Oh, my pleasure. You wanted to look at Harmony Gold?
Yes, please.
Tell us what you're doing, how we can help you. Are you in it, looking to get in it?
Looking for an entry point, and I'm trying to do the retracement level, so I was wondering if you could explain that a little bit.
Yeah, absolutely. So if we take a look at Harmony, are you looking at this as just a short-term trade, a longer-term? You know, is there a specific time frame you're looking at?
I don't know. It all depends on kind of how it works out. It's kind of kept going down the last few days, so I've been thinking about hitting it for a long term.
Okay. Well, let me answer your first question here, and then whatever I don't answer, just ask me again. All right. So
okay.
we're going to take a look at the retracement. So that was the first thing that you took a look at. So what I did, Jason, is just went to the monthly chart, and we're going to start with the swing point low. In Harmony Gold is trading inside the monthly swing point low candle, which is November of 2008. So if we take a look at retracements, we'd go from the very low there, which is $5.47, all the way up to the high, and the swing point high in this on the monthly chart is May 31st, 2011, and that price is $15.73. So what Harmony Gold is doing right now, it's at that third retracement level. It is at that 0.786 level, which is $7.67. I'm going to go ahead and put the relative strength. I was going to do that. What did I do here? Give me a second here. Thank you. Sorry, I hit a button that I haven't hit before. How about that? So not on the monthly chart, not oversold or anything. That means that they could run a little bit lower. And so it's at the 0.786 level. $7.67 would be that number. So are you watching on Tiger TV?
Yes, I am.
Okay, great. So if that level breaks, and you know what it will do is it'll travel all the way down to the $5.47 mark. Now it's trading inside that candle as well. The high of that is $8.77 out there. And so when you're inside a swing point, until you clear that area, says that you can go ahead and, in this case here, test the bottom of it. So that's on the monthly chart. Now let's go put this on a weekly chart and see what we've got going on here. And on the weekly chart, what we can see that it's trying to do is get down into, looks like a little bit of a gap that might be out here. And let's take a look and see if it is. I'm looking at, Jason, the week of November 21st, 2008. That high is 723, and then there was a low of 722. So, no, there is no gap, but it's trading inside that December 5th candle out here. Volume, let's see, as it comes towards the swing point low, which would be November 21st, 2008, 14 million shares is what you've got down there. Last week, as it was moved down with 11.5 million shares. In the first 2 trading sessions, 3.6 million. So it's coming into that swing point with the right type of volume, but does not look like it's tested. Let's see, 723. It hasn't tested the high of that. That's where you're going to get your next release of information on the weekly chart, is at the price point of 723. Now, from a bullish standpoint, what you would want to see is you would want to see a test of that area on lighter volume and then a close back above 723. So that's on the weekly chart, okay?
Okay.
All right. Now, I'm not saying that that's the only test. That is the first test that you would take a look at. What you would also do, and on the weekly chart, it is not oversold at all. Now let's take a look at what it is most recently doing out here, because that was taking you back to 2008. But let's fast forward just a little bit here in the current time frame. We're going to take a look at the most recent swing point on the weekly base that it is dealing with, which is December 7th, 2012. And that has 11 million shares, and the low of that is 746. It has gotten down to 746 this week here. So that is the area where it is dealing with. And if you get a close this week below 746, that says, okay, wait until you see what kind of tests go on inside the November 21st swing point. Okay?
Appreciate it, yeah.
And you want to watch the volume. Now, we're going to come to the daily chart on Harmony Gold here. And on the daily chart, what it is doing, it's taking on, we looked at the week, it's taking on the swing points here from the November the 16th. That's probably the one that we should be paying attention to, just simply because of the reversal in our marketplace. That was 2.4 million shares. Coming in yesterday with 2.1 million shares, 1.4 the day before, and today it's got 460,000 shares. So yesterday, saying it's coming in a little bit with too much volume. You'd like to see some lighter volume. What you really want to see, if this is a longer-term trade for you, what you really want to do is you want to wait until you see a sign of strength. And a sign of strength for you would be something like the candle of December 21st, where you had accelerated volume, which was 8 million shares. What you didn't have on that day was you did not have wide price spread, and that's really what you want to see. And then what you can do is you want to go ahead and draft, behind that, or wait for some type of bullish reversal signal out there. But this still says on Harmony Gold, there's some more tests that need to be done out here on the daily, on the weekly, and on the monthly chart. Okay. Does that help?
Oh, yeah. That gives me a lot of insight. Thank you.
Okay, you bet. And thanks so much for calling. Thanks so much for listening.
Thanks.
You bet. Let's take a look at, let's see, what else we have going on here in the marketplace. I want to see what is to the downside. Let's go take a look at precision cast parts, because we know the auto business has been up big. PCP is the ticker symbol. I believe they're at precision cast parts. I think they're big into the automobile sector out here. That is down with volume. Let me see if there's any news behind precision cast parts. They're off about 3% here, but down $5.60. I don't see any news behind the move there. Number 2 in the clubhouse to the downside, right behind behind Chipotle, which is off 5% here this morning. Now, what Precision Cast Parts is doing, as we take a look at the daily chart here, it is taking on this gap up area from November 12th, and that is the high. The high there is 182.40, so it's got pretty good volume there. That should be an area of support. It's got 2.1 million shares at 182.40. As it came down to try to get to that area, it did it with 1.5 million shares on January 8th. Today, it's gotten down to 182.82, so it has not gotten all the way down there. But volume-wise is 467,000 shares, which is quite a bit of volume for this equity in the first hour of trading. But let's go down to take a look at a intraday chart. Let's look at the 5-minute chart here, see if volume is picking. Oh, look at that. There's a candle there as a downdraft. Volume-wise, though, it's starting to dissipate a bit. That is in precision cast parts out here. That is a wide-ranging bar to the downside for sure. 877-927-6648. Apple up 15. Goldman Sachs up 340. Salesforce Innovation down $5. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks, and let's go take a look at Netflix out here because, we had Jason call from Spokane, and we were doing a lot of swing point analysis there, taking a look at some retracement levels off of the monthly chart here. But let's go learn from the Netflix chart out here because this shows really what it was that here's a chart where I was showing Jason what to look for. So now in this case here, we're taking a look at swing points. Let's take a look at off of the bottom here. So as Netflix was making its most recent low, September 4th out here, it had gapped down just slightly, moved down with 12.4 million shares. The low there was 53.13. And if we take a look at this, I'm going to blow this up if you're watching us watching this on Tiger TV here. And if you take a look at the trading session of September 26, it gets down to 53.05. So it gets underneath the 53.13 level. That had 12.5 million shares. Gets underneath it. 5.2 million shares on the day of September 26, rejects that area. And when it was doing that also, if you were also tying together the relative strength, relative weakness, what you can see here is it was down towards the lower level, down towards that oversold territory out here. You want to be buying things, right, at lows. This thing was a successful test of that swing point. It was a rejection with lighter volume out there. And so what we can see is then what happens with Netflix. Netflix goes ahead, moves up, creates a island reversal as it was getting inside the gap here that was left going back into the July 25th level. Of course, as it was getting up there, you know, once you get up into an overbought condition, your expectation should be that you should start to see a pullback. Then you've got to determine what time frame it is that you are trading and what you are looking for. You were looking for a longer term type of a trade out there. Then your expectation is once you get up to those levels, once you start getting into utilizing the relative strength indicator, once you get up into the overbought condition, your expectation should be that you're going to see some kind of a pullback out here. It works that way on the top, works that way on the bottom. Now if we take a look at what Netflix has done, Netflix makes its way all the way up to this open gap, and it's got several of them, most certainly. But where the breakdown really began on Netflix was on April 23rd, 2012. That day, gaps down just slightly with 11.9 million shares. It was that next trading session where it gapped down with 16 million shares where you really had the wide price spread. But if you take a look at the session from April 20th, that low is 105.67. Then the high of the April 20th is 105. So you've got a little bit of a gap out there. That has 11 million shares. So take a look at Netflix as it comes in. The top of that gap again is 105, even Steven. Take a look at Netflix as it gets up to 104.50 on January 14th, gets up to 104.36 on January 15th, does it with 3.3 million. Then yesterday was with 2.4 million, and that's coming into the trading session with 11 million shares to the downside. Now, what Netflix is doing is truly setting up a consolidation range out here. You know where resistance is in this equity. You also know, now if you were inside this equity, your expectation would be as you got up there, you were coming in with lighter volume, and you also saw that the RSI was moving where? Moving into the overbought condition. So your expectation should be a pullback. Now, what you've got is a two-day formation here, bearish candle formation here, so you should be expecting it to pull back. Volume-wise, though, not too bad, 1.4 million shares. The area where you should find some support on this is 14 million shares from December the 4th out there. So hopefully that helps you to put that together as well. If we go back and take a look at the Nasdaq futures after moving in to that 1 to 1.272 A to B equals CD and that 0.618, which was a Gartley sell area, as we were pointing out, moving into what? Overbought territory. Your expectation should be it's got to work that off. And it's working that way off just simply by pulling back here. Not any too much volume or anything like that. Stay tuned, folks. Basil Chapman will be up next. Larry Pesavento will be with you from 12 to 1. Daryl Martin, 1 to 2. David White, 2 to 3. Ken Shreve, 3 to 4. And the Tom O'Brien Show from 4 to 6. Have a great Wednesday, folks. Look forward to seeing you in the morning.